Good evening. This is the Elliott wave update for the S&P 500 for Wednesday, January the 19th, 2022. The S&P continues to follow current analysis and did end up during globex, as I felt it may, put in our low for the internal 3 of 3 move. And then during our session, right in the beginning, rallied up and put in the subminute wave 4 of the minute third wave, and is now dropping lower in that subminute wave 5 to complete the minute wave 3. So what have we done within that so far? We're on the 30-minute chart right now, and we can see that I have still this has gained some support to be the completion point for the intermediate wave 5, the primary wave 5, the cycle wave 5, and the super cycle wave 3. And I'll tell you why. The market did come down and break below 4520.50, which was the completion point for the intermediate wave 4. And let me just take this back out to the hourly chart, and we're going to see that a little bit cleaner. Maybe, yeah, right there. There is the intermediate wave 4. Then we get a nice 5-wave rally, and then intermediate wave 5, and then the primary wave 5, et cetera, et cetera. So we're coming off in that first minor degree 5-wave decline. And within that, of course, we got minor wave 1, minor wave 2. We're in minor wave 3. And within that minor wave 3, we are still within the third wave. And by breaking 4520, which it now has done, it keeps regaining it, sliding back below it, jumps back up and regains it, but it's got a low of 4517.25. And that's basically almost enough in my book, in that it broke, although it keeps, tries to regain it, and that's all fine. But right now, I'm still looking for it now to come down, primarily to 4503. That's our next support on a Fibonacci basis, because that is where the third wave, the minor third wave, would be equal in length to the minor first wave. Excuse me. And so what does that portend? That now tells us that I believe that we are going to surpass 4503 and end up down here a little bit. This particular wave is subdividing, that fifth wave is subdividing. And so it's looking pretty good that it's just going to come down and break below that before it's all finished, because it seems to be in a third of this fifth wave down. So everything is going according to plan and subdividing nicely on the downside moves. And although, it did seem that, okay, it was pretty strong rally, and they had to have it pretty much from the opening this morning, and they pushed and they pushed and they pushed, and the sellers came in, dropped it down, and then they rallied it back up, and then it just dropped pretty steeply into the close. Now, it continues to follow the Elliott patterns as well. So what I mean by that is that we get this solid rally, it's an ABC up, then 1 of 5, 2 of 5. We get into 3 of 5 because the third wave is subdividing in and of itself. All of it continues to follow very clean Elliott. It's a very subdivided and so therefore much smaller degree than what I'm counting. So I'm not going to continue to put that up. So one other thing that it possibly could be, and that's, again, starting from here, and this would tell us that the S&P is about ready to drop off a cliff, and I'll demonstrate how. If I have to rechange the labeling and move this minute wave 1 down to this position, and the minute wave 2 to this position, then we are just beginning that minute third wave. And then that's the case, I believe there's no way that 4503 is going to stop it. I would not assume that 44,447 is going to stop it, or 4412. That would say we're in a third wave, and it's just the longest and the strongest sequence within this larger move. it could get very ugly. And it does fit, and I'll tell you why. That to move this around, this is definitely third wave material, but in the type of third wave that on the degree that I'm looking for, it's going to look more like this drop. So in other words, that particular drop just kind of went, and it dropped $30 very quickly, boom. And that's what I mean by, we get inside those 3 of 3 moves and they just go, they drop, they expand, they accelerate. And so I may still, just depending on how this all pans out and where it stops and what kind of rally we get off of it. Again, remember that the counts on a day-to-day basis are fluid. We're in a market that's moving. So it's not as easy to go back and say, well, this is all pretty clean, it's all done. Here, we're still adding to it every single day. So that changes how we label depending on what the market then tells us. So again, I'm going to leave it as it is right now, but keep in mind that we could be moving that minute wave 1 down to here, minute wave 2 down to here, and that would suggest this is the very beginning of the minute third wave down. And again, if that's the case, go out to the 4-hour chart this time so I can get a little bit more room on that downside. Let's open that up. If that's the beginning, 4503 is not going to contain it. For 447, maybe, but I'd be looking for 4357 to contain a third wave. And if it indeed is that third wave, so the internal wave 3 of 3, then I really would be looking for it to just zip very quickly down to here. So it's almost going to appear as if we're just going to have a very severe down day. And tomorrow to Friday fits pretty cleanly on how that can happen. Again, remember, we are in earnings seasons, and thus far, they're not being well received. So investors, traders, everyone's beginning to realize, we may have been expecting a little bit too much. And again, they might be reporting okay year over year earnings, and even fourth quarter earnings, but it's that forward guidance as we're moving into 2022. What do they want to say in an atmosphere or an environment of interest rates that are expected to rise and have several raises during this year? So with all of that in mind, what do I think for tomorrow? I think that we're going to get additional downside. And once again, it could just start and happen, the bulk of it, during the Asian market and then the European markets. So we could already be down quite a bit by the time we get back in tomorrow morning, get back online and get ready to trade. Now, you may be in a position where you can trade the globex session. That's great. Enjoy it. Same concept, same strategies, everything stays the same. The difference being that during the night and the globex session, the bid offers just kind of widen out. And that could really upset your trade, depending on how you are trading it and what your strategies are. In any case, I do think that we could be staring at a pretty strong downside move to kick off this middle of this third wave. So I had originally put it down here. I switched it back because the fifth wave could also, but I want to leave open again. If it comes sailing through 4503 and starts heading for 4450 or 4447 and lower, then we could be in trouble. And I'm going to tell you one other thing that will come into play here. Here's the 200. And if you remember that when we broke and we closed below that 50 yesterday, and then today failed on the rally attempt and closed more towards the low, it's an additional negative bar. So we have negative, negative. And so we're getting quite a collection here of negative bars, which is does very well and coexists with the count that's in force. So again, here we have minor wave 1, minor wave 2. We're in a minor third wave. We're in the center section of it. We're in likely what could be the third of the third, the 3 of 3 move. You've heard me talk about them before. In a 3 of 3 move, it is the point of recognition. It is the point where investors, market makers, everyone who's participating realizes, oh, we're going down. And it could be that we start breaking support. And when we start breaking that support, it drives in additional selling pressure. And that's where we start to accelerate. So it's in this period, in this point of recognition area, that I'm looking for acceleration as the selling, in this case, becomes very intense. So the S&P could drop very quickly. So again, if we break 4503 without just kind of hanging around, bouncing, hang up, bouncing, if it just drives on through, breaks below 4,500, then it's going to add a lot of fuel to the continuation. Here is the daily 200. Sits at 43.94 right now, and that's where it's been. So again, it's kind of flat, but as this now lines itself up, now again, on a daily basis, I need the 8 to come below the 50. I need the 20 below the 50. We get a serious enough drop and it starts to break below that, that will pull those down. Again, if you're trading with your daily chart, which a lot of the larger traders and people do, they reference this chart, these moving averages dipping below and lining up the market for a stronger move in the direction that it's going. So that's why I keep a very close eye. If we get that 20 starts to cross the 50, the 8 crosses the 50, it's going to line up a lot more seriously. And that, I think, as well brings in that additional pressure for a point of recognition 3 of 3 type of a move. So tomorrow, pullbacks notwithstanding. In fact, you know, we've come down, you can see we kind of pull back up, we come down, we pull back up. Again, rallies should be on the shallow side. And as I suggested yesterday, that the 20 and the 50 should contain rallies for today. That's exactly what took place. It got close. They went up and they checked out that 50, the hourly 50 twice today, but they could not break above it and get an hourly bar to close above it. And that just brought back the sellers back in. Now, so again, same story. I'm looking for, on this size, I would hope that the 4 and the 8 start to control it. But here we have the 20 at 45.67. That I'm going to look to hold any rally attempts lower, that they don't surpass it. If it does, then say, for example, it gets down to 45.03 and then it just bounces and it comes back up and it starts breaking above the moving averages, well, then I'm going to have a lot more confidence in that the 5th wave is complete. And then that's going to put this 3rd wave right there, the minute 3, and we're in a minute 4 correction. So, and again, that would suggest that we're going to start heading back up into these levels. We should not, again, if it stops there and I put a 3 and we're in a 4, there's the no break line. 46.06, 46.07. Can't go above it. And if that's going to be the count right now, it's not. So again, I'm looking for additional downside. Rallies should be limited and held to small, let's say a small bounce before we continue lower. We have support at 45.03. I may provide a pause, but I'm telling you right now, my gut's telling me it's like you're going to slide right through that. Next up would be 44.47, 44.12, 44.13, and then where I think this 3rd wave can complete at 43.57. That's pretty steady drop from here. That's over 100 points. Now, let's not be disillusioned. There were several points yesterday where the S&P was down 96, almost 100 points. These are possible moves, and it can happen all in one day. So that's my look for tomorrow. Upside, we've got our marching orders should it occur. We're looking at least for a break and a drop down to 45.03. That would be absolute minimum in my book. Then we might get this fourth wave bounce, but I'm not in my gut thinking it's going to happen that way. And then I would be looking for 44.47 all the way down to 43.57. That's the zone. That's the zone that can complete this minor third wave. When it's done, we're going to get a -4 bounce, and it should be a good one. It should be very solid. We should get a nice steady pop right off of it, get a pop right off of it. And that fourth wave would be likely to come back, and well, we'd be forming it, but to come back to the fourth wave of one lesser degree. And so that would come on once we get the 3 and the 4 and the 5 to complete minor. Then it's going to come back to wherever this minute wave 4 gets put in. Haven't done it yet, can't really say. All right, going to leave it right there. Our next update will be Thursday, the 20th of January.